Richard Harris is now with us here. He's Executive Director at Port Shelter Investment Management. Richard, good to have you with us here. Thank you very much for your time. Simple question. Do you think a top is in for a US Magnificent Seven?
Well, it's certainly looking like it at the moment in terms of an intermediate top. I think, the Magnificent Seven, they're still great stocks. They're still the place you probably should have a big chunk of your investment because they're not going to go away. They are the darlings of our era. So you really do want to have an exposure to them. But I think that the general mood of the markets is softening quite a bit. We're seeing some not quite so good data coming out of the US. We're seeing President Trump being extremely irrational in many areas. And I like the way you talk about him bowling a googly earlier. In fact, maybe he's bowling more of a flipper because he comes up with these big ideas, tariffs here, tariffs there, and then he rows back on them. So it's very difficult, I think, for the markets to try and get a grip on where policy is actually going. And that, of course, is going to lead much more to risk off than risk on.
So that's about the US tech. What about the US equities in general? Is there reason to be bearish about US equities? Because the main driver for US markets last year were AI dominance, one, and secondly, the strength of the US economy. And now there are flashing warning signs on the US economy too in terms of the latest economic data. So on the whole, what is the call on US equities?
Well, I think the call is probably that we're going to see some weakness. So I think I'm not looking at any form of big crash, but I am looking at the market languishing for quite a while. And I have been saying for 3 or 4 months now that we're in an era of the great pivot. We've seen the US be very strong now for 3, 4, 5 years, easily outperforming the rest of the world and very much outperforming China, which is still suffering from, its post-COVID malaise. But in the last year, the Chinese authorities have made great strides in trying to reflate their economy. It looks from some of the indicators that they're doing quite well on that. As we all know from reflation, that a lot of that money ends up in the stock market and the investment market. So far, it's been China tech, but I think that we're likely to see more and more money go into the markets, which means that the Chinese market is likely to outperform the US. So that's where I see the pivot occurring.
Richard, what about the Indian markets? We have suddenly taken a backseat. We've gone into a lull for the last 6 months or so. In cricketing parlance, we are sitting in the pavilion, waiting for our chance to come out and bat. And it appears the FIs have deserted us for now, at least. Do you think post this correction that we have seen, valuations as well, a little bit better than what it was a few months ago? Where does India stand right now?
Well, I think the advantage is you're sitting in the pavilion. You've still got a few batsmen to come. The Indian economy, I think, is in a pretty good position. And if you look back, and I'm much keener in many ways, if you're looking to forecast, just look back over not just 6 months or a year, but look back over 2, 3, 4, and you can just see the incredible performance that the Indian market has had. So it's not a particular surprise, I think, that it should start relaxing a little bit, languishing, people taking profits, people saying, OK, where's the next step coming from? There are concerns out there about what Trump is doing and the impact that might have on global trade. And there is obviously, I think, some competition from China now as a big EM market, although you can hardly call China EM. These days, you can almost not call India EM. But there is concern that those markets are mildly competing. So investors looking towards China might actually be distracted away from India for a little bit. But personally, I'm not terribly concerned. I think the Indian economic story is still intact. But of course, markets don't go up in a straight line.
So China outperforms the US market. But what about India? Can we, move in step? Or do you think we continue our period of underperformance for a little longer?
Well, I'm much more of the camp that I think India is likely to move in step. I don't think there's much likelihood of underperformance unless there are specific India-based issues that we don't know about at the moment, the unknown unknowns. But I think if you're looking at the known knowns, India is likely to continue to be quite strong. The only proviso, of course, is that if global growth slows down a lot, largely, I think, because of Trump's actions, because markets aren't that robust, So the kind of things he's talking about are likely to create uncertainty. Then, of course, India is going to suffer, but that will be the same with equity markets all over the world.
All right, Richard, we'll leave it there. Thank you very much for joining us and running us through a lot of that perspective, which is much needed. Appreciate it.